Time for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the trades. Mike Shorr of Prosper Trading Academy ready to take us through the trades. And so first, he's looking at TJX, the parent of TJ Maxx and Marshalls. What are your thoughts here, Mike?
Yeah, so in general, I'm pretty bullish on the clothing retailers, but really, what TJX looks like to me is that it's more of a range-bound trade. So it's sitting right at or slightly above its 50-day moving average. So I'd like to sell a put spread there. And then to the upside, I'm betting on it not making new highs. And so selling a call spread there. And then there's your iron condor, just basically staying in between that 50-day moving average and recent highs.
I see. So really hedging and staying in this range. Tell me, Ben, your thoughts.
Well, I can understand some of the negative sentiment that we're hearing there based on some of the recent price activity. But let's begin with the move up first and foremost. A high conviction trade, well-defined trend from 60 all the way up to the recent highs we saw up around 83. You can see we're talking bottom left corner to top right. And yeah, we're kind of losing some of the momentum to the upside as of recent. But you can see along the way we've seen, well, a few areas of well-defined consolidation separated by those well-defined areas of vertical separation. And again, trend environment to the upside, 60, 64, these areas where we pause and kind of regain composure. And here's what concerns me a little bit. We always talk about as the forming a current area balance, you want to reference the middle of the prior area. And you can see we're starting to roll over here. But based on the bigger picture move that we're seeing, I'm kind of giving the benefit of the doubt to the bulls at this point and just kind of calling this one larger area. We'll call it 83 to the upside, 76 to the downside. Moving away from the intraday, though, guys, you can see a very similar pattern in terms of the daily time frame, right? We've got the bottom left corner to top right corner playing out here, sideways consolidation, not as bullish as it has been or high conviction to the upside as it has been, but just want to point out here, even as you look at this chart, you can see going all the way back to March of last year, we're talking about a few well-defined areas of consolidation, 63, 72, 79, and again, attempting to form one up around 82, but kind of rolling over. So there's an argument here for the bearish case at this point, but again, just kind of giving the benefit of the doubt to the bulls and looking at this as sort of one larger area, 76 to 83. Mike mentioned that 50-day moving average. I want to show you where it stands. We're hanging on it right now. You can see well above the 200-day moving average still, but look at RSI. It's actually starting to come off, and this was interesting because here we had a bit of a price RSI divergence. RSI didn't take out the highs from late last year, but the price did. So again, somewhat supportive of that bearish narrative here in terms of what we're seeing Mike describe, but something to keep an eye on here. I'm watching the 50-day moving average, this lower extreme. I think we're kind of in the middle of a range here, low extreme again being around that 76 area.
All right, thank you for that. And just to see that pullback, and Mike, it's really interesting because you said you were looking at many of the retailers. Do you have a theme of how you feel about the group?
Well, they got beat up pretty good, and they've continued to deliver. We are seeing, I don't want to say, we're seeing a lot of the production centers in China that they're starting to ramp up again, and the consumer is still resilient. The Americans, that's one thing that you can bet on, is that the Americans are going to spend money, and we've gotten through a lot of the really, really bad stuff that we've seen. And so I do like that. So this iron condor is a bit of it's a range-bound trade, but it does have a slight positive delta to it, playing off of that same support that Ben was talking about.
Right, understood. Okay, let's move to your next name, and that's On Semi. It's trading around $64 today. Your thoughts here on this?
Yeah, same thing. It would have been a little bit better if we could get into this pre-market, but I was looking, I continue that if you're going to have a bullish sentiment about the markets at all, you can't be bearish on the semis. It's just one does not go and the others, go down. So On Semiconductors, one of my favorite ones out there, a little bit, I guess, off-brand and not as well known as your NVIDIAs and your AMDs. But that was setting up for a really nice grind type of move up off of support.
Right, understood. Okay, so we certainly saw a couple of goes of it, but then a fail, right? You saw it creeping up, hitting some tops. Ben, what are you thinking there?
Well, I did notice those tops up around 77, but first and foremost, similar pattern, big move up. We're talking about bottom left corner to top right, 44, all the way up to 77. You can see a bit of a double top up here. That was the August highs. We retested it back in October, early November, and it failed to get anything going to the upside. So look what's happened. We've kind of come off since. But as I look at this, a very similar pattern in terms of what we were just talking about as far as TJX. You can see the areas of consolidation that have formed. So at higher and higher levels, trend going, value forming higher equals trend to the upside, currently balancing around 68. And here you can see a pretty well-defined range as we do establish that balance. So we've got an upper extreme, 77. It coincides with those double tops. You got the lower extreme from beginning of October around 55. So that's going to give us that next indication of directional conviction one way or the other. Everything, unfortunately, within this area, $22 a range, is kind of random and without conviction, not really feeding into the trend one way or the other. So we need to basically kind of wait. Taking a look at the daily time frame, you can see I'm going to point out a very similar look at this chart as well, again, where you see these two separate phases, the high conviction to the upside, the more overlapping rotational. It's wash, rinse, repeat. That's one of the beauties of looking at price activity through this lens, is just the simplicity of it. And again, sometimes more clear than others, but when it's clear, in my opinion, that's when you want to be participating a little bit more heavily. So currently consolidating around 62.50. You can see this wide range that we're forming. Let's just identify that, the upper and the lower extreme associated with it. And whoops, you can see, taking a look here at what we have. Again, 77 to the upside, Nicole, 45 to the downside. Let me show you what's going on in terms of the bigger picture with the 50-day moving average, the 200. We're kind of pinched in between those two moving averages. And look at this RSI, I think a reflection of that. We're not really getting a lean one way or the other from RSI, just kind of hanging out in the middle of this range right now for the most part. Again, not a real lean one way or the other on semiconductor here.
All right, thank you for that. Yeah, you pointed the 200-day out, and I know Mike was watching exactly that. And your trades go into early February, Mike, right?
Yeah. So this is a delta positive trade. But what I'm doing is I'm buying implied volatility after earnings, so that implied volatility is going to be higher and it's going to stay there. And I'm selling implied volatility with that February 3rd. So that is not going to include that. So you're going to get the decay of that. And implied volatility, prices are going to stay relatively stable, which means implied volatility goes up. So even if you come off a little bit, the Vega effect of that is going to keep this calendar spread supported. So you can make money on implied volatility all by itself, or by a nice move up to that 65 strike.
Right, understood. Okay, let's move on. I am curious, before I get to financials, I do want to get your thoughts on tech, particularly all the layoffs that we've been seeing. You want to give me a quick tech thought?
Yeah, in general, if you can keep productivity up, then laying off workers is, it's bad for the workers, obviously, but from the company standpoint, that's a big cost input that is now lessened. Now the question is, can you be more effective with less people? And the management, we've seen it kind of across the board. They're betting that they can. Maybe they were being too focused on the next new thing, or putting their fingers out in different directions, trying to find that next new thing. So I think in general, it's probably pretty supportive that these companies have proven time and time again, except for last year, that they can work better with less.
Okay. And then there's JP Morgan Chase. Of course, we've already heard from a lot of the banks for earnings season. Rates are still on the rise. Your thoughts on JP Morgan?
Yeah, I'm actually kind of surprised that we've seen this pullback here. And so I'm going to be aggressive here at the 50-day moving average. Other than Goldman Sachs, really, all the banks had really, really nice quarters last year. And even Goldman Sachs came off of those lows. So I'm playing off of that 50-day moving average in JP Morgan, and I'm actually selling a put spread at the money, and I'm buying a slightly out of the money call spread. So it's a bullish play, and I'm financing the purchase of that call spread with selling the put spread. Now that doesn't come without risk, but if we can't hold that 50-day moving average, well, then it's just an easy out and buy back your put spread. And probably, depending on how long it takes, you might actually make a little bit of money on that short put spread and then have a relatively cheap shot to the upside.
All right. And your thoughts on JP Morgan Chase, Ben?
Well, this one looks a lot like a couple of the other stocks that we talked about, TJX, especially as I look at the hourly time frame. A nice move from the fall, mid-October levels we saw around 101 all the way up to, well, 143 in reaction to earnings. A well-defined trend to the upside, bottom left corner to top right. And you can see some volatility in reaction to earnings. They had quite the event there that they're still trying to look at some dust settling here and figure out which way to go from that. But again, as I mentioned with TJX and the others, a very similar pattern, right? You've got a trend environment to the upside, possibly slowing some, but areas of value, migration of value to the upside. And here's where I drew a question mark because, again, we tried to kind of pane out here around this 141 area, but look what started to happen. We're working our way lower. But again, we always talk about the middle of the area of balance that formed prior to the one that we tried to form or are forming. And here you can see that coincides with 133. So that's going to be a key area to keep an eye on in terms of next week. If we can get below that, it's somewhat bearish. Holding above that supports that bullish narrative that we're looking at here right now. I want to point out here that on the daily time frame, though, a little bit of a different scenario in terms of some of the other names we've been looking at today. You can see how it had been trending lower in this move we just looked at off those October lows, again around that 100 level, 101 up to 143. That's somewhat counter trend. And so this I noticed here as we just look at the daily time frame, you can see again how we had been forming areas of value from 172 all the way down to the lows at around 100. 1, 2, 3, 4 well-defined areas of value. High conviction trade after a failed attempt to post a new low here. Works your way through the middle of the balance around 110, 112. And look what happened. Off to the races since. We've got a new area of value forming at a higher level. Not only invalidating the working assumption that we were trending lower, but now starting to establish a value area at a higher level. So again, just kind of that bearish narrative here has been invalidated severely. Taking a look at what's going on here in terms of the bigger picture, and there's that 50-day moving average that Mike was talking about. We're holding above the 200, but looky here, RSI again, another instance where we tried to break out to the upside with price, but we failed. RSI is coming off. We'll keep a close eye on those lows that we saw from December of last year, again around just below 130 and RSI just below 40.
And that RSI supports that move, just like what you're saying. And we're seeing that this week. I mean, just this week now, we have our first losing week, Ben, in 2023, right? People got excited, maybe. Mike Shorr, Ben Lichtenstein, thank you for the big three today. Much appreciated. Mike Shorr, Prosper Trading Academy, and our own Ben Lichtenstein looking at the charts every day.